In most contexts, the use of the word patient doesn't really mean much unless you're speaking about the US Federal Reserve and its intention moving forward to raise rates. What does this mean not just for the dollar, but also for African currencies and economies as well? That's a question we'll be exploring in a lot of detail over the next half hour right here on Global Business Africa. You're watching us from the Kenyan capital, Nairobi. I'm Ramanyang. Here's what's coming up. Property developers in Uganda hurt as the dollar appreciates against Ugandan shilling. And the last of locally assembled locomotives leaves South Africa's assembly line. Right then, let's start in the United States, where the Federal Reserve has indicated that it might start hiking rates for the first time in 9 years. The central bank dropped the word patient from its post-meeting statement, a subtle, if very important indication that the era of zero interest rates, at least on that side of the Atlantic, is essentially over. It did, however, sound a cautious note about the health of the economic recovery in the United States. Fed Chair Janet Yellen has kept rates at near zero since taking over as head of the central bank in February last year.
Today's modification of our guidance should not be interpreted to mean that we have decided on the timing of that increase. In other words, just because we remove the word patient from the statement doesn't mean we're going to be impatient. There has been a slight downgrading of estimates of growth for this year. You mentioned the dollar. We noted that export growth has weakened. Probably the strong dollar is one reason for that. On the other hand, the strength of the dollar also in part reflects the strength of the U.S. economy.
Now, we'll be passing the post-meeting statement from the Fed a little later on in the bulletin live from Washington. But first, let's give you an idea of what effect the stronger dollar is having. In this case, from Uganda, players in that country's real estate industry are concerned that the rising strength of the American dollar may essentially put them out of business. Recently, the Ugandan shilling went as low as 3,000 Ugandan shillings against the dollar. As Michael Baleka reports, that is now feeding into the construction market through increased costs.
Building and buying real estate property in Uganda is becoming more expensive. Contractors point to the continued rise of the US dollar against the local currency as the reason for more pricey property. Traders say they are now receiving fewer customers as the cost of importing building materials hits the roof.
We have increased actually our prices just because we need to get our profits in order to stay in business.
Almost 65% of all materials needed by the real estate industry are imported into the country. Property agents say the increasing costs are threatening existing projects.
Unfortunately, because we don't have the manufacturing capacity yet for some of these materials, there's just no shortcut in the foreseeable future.
This comes at a time when the real estate business has been registering significant growth in Uganda. Those in property and construction business may now have to rethink their strategies in order to accommodate price fluctuations. However, predicting future trends in the currency market will not be easy. Some property dealers believe the depreciating shilling is just a short-term move that should not cause panic.
Watch every dollar you're spending, be a bit more stringent than you were before. For those who are just commencing projects, we're saying, look, it's better to buy in bulk if you possibly can, or even better to hire a larger scale contractor.
Agents argue that larger scale contractors can easily share the current cost burden because they enjoy better lines of credit for industry products. Current market estimates put the shortage of housing units in Kampala alone at about 200,000. This figure underscores the amount of opportunity available in the real estate sector in the East African country if the currency fluctuations can be dealt with. Michael Baleka, CCTV, Kampala.
South Africa's rail network received a ceremonial boost on Thursday when the country's president, Jacob Zuma, unveiled the last locomotives in a deal signed over 2 years ago with China South Rail. The 85th locally produced locomotives out of a total of 95 is part of South Africa's long-term fleet renewal program. Angelo Coppola was there.
Transnet, the country's state-owned transport utility, is on a major drive to make itself commercially competitive. And the rail side of this business is a key component of the program.
We're very proud because these dual electric locomotives are the first that our Transnet engineering unit has assembled here in South Africa. We've traditionally assembled diesel locomotives.
As the final locomotive leaves the production facility, the financial deal was completed some time ago.
The transaction has been costed about 2.7 billion rand. It's a fixed price contract that we signed 2 years ago. As we know, with China South Railways, we fixed the forex, we fixed the escalations. Basically, it was a fixed price contract that we entered into 2 years ago. So there were no exchange rate fluctuations, no escalation costs associated with any changes in input costs.
With the financials out the way and the production almost complete, an essential component in the process is quality control.
We're checking the whole functionality of the whole locomotive. Number one, we check brakes. There is a test document that we use to check if ever this thing complies. Remember, we've got RSR, Railway Safety Regulator. There's some of the things that we need to test before this loco can be handed over.
The engineering works are putting the finishing touches to the last batch of locomotives. 74 of these are already in service.
These locomotives are being deployed onto our Northern Cape to Eastern Cape corridor. They will ferry manganese. They are also some of them are being deployed on the iron ore flows from Postmasburg to Vanderbilt Park and Newcastle.
It's all systems go for these locomotives, but there are more in the pipeline. More multi-purpose locomotives are being built as we speak, under another contract.
What that means from a country perspective is that we're going to gradually, but in an accelerating pace, begin to improve the logistics competitiveness of South Africa.
Big day for Transnet and for the country and for relationships between China and South Africa as the 95th locomotive is produced here at the Transnet factory at Kudusput. I'm Angelo Coppola for CCTV in Pretoria.
Now, the ripple effects of a stronger dollar, of course, is a key concern for a lot of sub-Saharan African economies. Let's get a better understanding of what monetary policy makers are thinking about over in the United States. Nathan King is live in Washington right now to help us decipher the latest statement from the Fed. Nate, the Fed essentially took the possibility of rate hikes in April off the table, and that effectively pushes it off to the second half of the year. Walk us through the sort of arguments that the Fed made.
Yeah, well, they may have removed the language patient, but as they've said, they're not impatient to raise rates. So why are they sort of holding back even though they've taken the language out? Well, there's a couple of things going on here. First of all, remember they actually revised the economic outlook of the United States for 2015 actually downwards from around 3% more towards mid 2.5% growth, which is a little sluggish considering the job growth that we've seen and the record corporate profits. But there's a few things going on here. We have seen a slowdown in economic activity. Housing, for example, has not gone at the same pace as at the end of last year. Some of that may be weather related. And even though we're seeing very strong job growth, we're not seeing wage growth, which of course is stimulative to the economy and GDP as a whole, and we're also seeing very low inflation as well. So the Fed realizes that the emergency, while these near zero rates were put in back in 2007, 2008, may have disappeared. Maybe the economy is not yet ready for the stifling feeling economically as what happens when you raise rates. So the smart money may have slipped from June towards September to October in terms of a rate hike.
Indeed, and that bifurcation between wage growth on one hand and jobs growth on the other hand, fairly interesting story. But let's focus on the divergence in monetary policy on either side of the Atlantic. The Europeans, the Japanese, they're essentially easing their monetary policy. The Americans, however, are essentially ending it. But at what point does a stronger US dollar do more harm than good, especially from the perspective of the United States?
Yeah, absolutely right. The strong dollar also factoring into the Fed thinking, but also this disconnect, as you rightly said, between the US, Europe and some parts of Asia. As the US strongly recovered, we are seeing a stimulus in Europe and near parity as a result between the euro and the dollar. Who would have thought that over a year ago when the euro is at 130 or so to the dollar? Now, what does this mean? Well, it basically means it's not bad for U.S. exporters at all with imports, because obviously it's going to be cheaper when they're dominated in U.S. assets, and it's actually not bad for the Europeans to have a lower currency, because let's face it, they need to export more, especially Germany, which has been hinging on the edge of recession. So all this could balance out. And of course, if we look at Japan, also has economic problems, export-led economy there also, that could help as well. But, you know, you can't really have a strong dollar and weaker other currencies going forward without imbalances within the global economy rearing their ugly head. But we're not quite there yet.
Indeed. Finally, Nathan, given the relative weakness of quite a few African currencies, the rand, the Kenyan shilling, the Nigerian naira, as the dollar rises, does that make Nigerian, South African and Kenyan equities a lot less attractive for American frontier investors?
Well, it's not just African currencies and markets, but you are right. Where does the hot money go in the global economy when the US dollar is strong? And of course, it goes into dollar-denominated assets. And that's the Dow Jones, the S&P 500 and the Russell 2000. And that's why we've seen the markets hold up very, very well, despite some economic headwinds. We were at 18,000, jumped 300 points on the Dow after Janet Yellen said that they may be raising rates in the near future. So obviously there is this feeling within the stock markets that there could be some room to grow. But there's always a tipping point, isn't there? And remember, you know, at what point do African assets look like a bargain for smart money that might want to get in on the ground floor, especially with a heavy industrial sector focused on dollar-denominated assets like gold and the like, where you could invest at relatively cheap prices because of the strong dollar and get any movement on the upside. So for every buyer, there's a seller in global markets, so I wouldn't rule it out. But you're right, the hot money has been flowing into US-denominated assets. It is an imbalance that, if not corrected, could actually cause a slowdown on the African continent as well.
Indeed, we'll have to leave it there. Thank you for that. That's Nathan King live in Washington, D.C. Quite eager to see exactly if this will lead to another event similar perhaps to the volatility we saw in the so-called taper tantrum. We'll keep tabs on the markets for you on that. Now, speaking of the market, quick run through those. Positive numbers coming through in South Africa, Egypt and Nairobi. Marginal numbers, in fact, in East Africa, down about 2/3 in Nigeria. News coming out, however, with regard to South Africa. S&P today downgrading Eskom to junk, which will almost certainly raise borrowing costs for the South African utility. Provides 95% of that country's power. We'll keep tabs on this story. Pay attention to it very closely in the next 24 hours. Egypt will require pre-obtained visas for individual tourists. No more of that visa on arrival business. And Ethiopia is looking for tourists who are too scared to visit its neighbors. We'll tell you why shortly.
Sustainable development and a commitment to developing partnerships with Africa. Some of the key phrases already used at the Africa Global Business Forum here in Dubai.
There is a need for a predictable environment in which investors have to put their money.
Welcome back. You're watching Global Business Africa. Now, Egypt's Ministry of Foreign Affairs is tightening visa requirements for tourists who are coming into the country. Visas will now have to be obtained before departure. They'll no longer be available upon arrival at the airport in Cairo. Individual tourists must obtain visas from Egypt's diplomatic missions, and only organized tourist groups are exempt. Now, these rules come into effect in the middle of May. The same decision was taken in September 2011, but the government suspended it after just 3 days following public outcry. Already, the tourism sector has expressed quite a bit of concern with the new visa requirements as the country is trying to get visitor numbers back up to at least pre-2011 figures. The government, however, maintains that some people have pursued political interests in the country under the guise of being tourists.
Actually, this is applicable only on the individuals, so it will not affect, this is rules and regulation, and the same thing happens when we want to apply for a visa in any other country. We have to submit documents, we have to submit a bank account, we have to submit lots of documents that sometimes it's very personal, but you have to submit it. So if the rules and regulation of Egypt now says, if you come among a group, fine, they will give you the visa at the airport, and there will be a travel company responsible for the information.
Well then, as I mentioned earlier, we've been here before, so why are we going back to the situation? Let's expand the conversation and join Yasser Hakim. He's live in Cairo right now. Yasser, given the fact that Egypt's tourism sector is essentially still in recovery mode and we were back here in 2011, what prompted this policy change? Is this driven entirely by security concerns?
Yes, and it's the same problem that happened in 2011 with the same pressure from the business and tourist companies, tourism industry. But so far the government has stayed put and is not planning, or says it's not planning to cancel this decision as it did before, at least for now. And it's mainly because of the increase in terrorist attacks, infiltration of militants. Anyone coming from Europe, especially that a lot of the ISIL, as we've seen and heard, ISIL members have European passports, and they can easily just come into the country. There's no need to say where they will stay. They will go into the country, stay as long as they want. If they just want to renew the visa, they pay $10 every 3 months, and no one knows what they're doing in the country. And there has been signs, and police says, sources say, some of them have been caught while training militants who are in Sinai, and they come in with the European passports, and there's no monitoring to them. And now what the government is trying to do is just to monitor who's coming in through this visa situation.
Indeed. The government did say that only organized tourist groups would be exempt from these new rules. Walk us through exactly how this will work in practice.
Now the responsibility will be on the tourist companies that send the groups, because before or prior to the arrival, a list of the members of the group will be sent to Egyptian authorities. They will have this list with them. They will take the visas in the airport, and then on the way out, the tourist company will inform authorities of anyone who did not leave with the group. And so knowing the list beforehand, they would know who would be missing and try to track this missing person to understand or to know why he did not leave with the authorities, with the tourist company back home. So the responsibility will be with the tourist company, and it will be coordinating with authorities in case anyone is left behind. And this way it's reducing the number of tourists who could go missing without any trace. And this will only be with the groups. And for Egypt, tourism with groups is actually the major number of tourists come. Individuals are not as much.
Indeed. The chair of Egypt's Federation of Tourism Chambers did express concern earlier when this policy was announced that it will have an effect on incoming tourist traffic. What's the formal response from the foreign ministry? Is it essentially the same thing they said way back in 2011?
The foreign ministry says security, national security is more important than the individuals. At this point, if someone wants to come, he can go, like visiting any country in the world, just goes to the embassy, gets his visa beforehand. The procedures are easy. There are not too many requirements for a visa. We're told it will take 48 hours to receive the visa. No problems there. It's just that what the foreign ministry is saying is the losses from, or the damage from terrorist attacks through infiltration in this regard is much more damaging than losing a number of tourists who are individuals. It's a national security concern at this point. Maybe in 2011 it was not so severe. Right now it is for Egypt.
Indeed, we'll have to leave it there. Fascinating calculus there, as laid out by Yasser Hakim. Still on tourism, but this time in East Africa, Ethiopia's tourism industry is enjoying quite a bit of growth as one of the region's fastest growing safe havens. Ethiopia is essentially seeking to cash in on the woes and travails of neighboring countries like Kenya, which are grappling with security concerns that are keeping visitors away.
Ethiopia is known for its rich history and cultural heritage. It's enjoying significant growth in the tourism industry, thanks to the negative perception of neighbors like Kenya, which is grappling with security concerns that are keeping visitors away. The country's National Museum is one of the major tourist attraction sites and receives more visitors every year.
The flow of tourists has increased from time to time at the National Museum, with a growth of 10 to 15% per year on average. For example, we had about 87,500 tourists flow in 2008, and this number has grown to 192,000 tourists last year.
Kenya, which has historically been favored by tourists, has been battling threats from Somalia-based Al-Shabaab, bringing the tourism sector to its knees.
Ethiopia is a very unique country, and the uniqueness has made significant difference for the flow of tourists to the country. Moreover, currently, the security issue is one of the main things that Ethiopia has as an asset, because you see how the Kenyans are struggling and other African countries due to the current situation, but Ethiopia hasn't witnessed.
Ethiopia boasts a rich cultural history, and events like Meskel, an annual religious holiday in the Ethiopian Orthodox churches, commemorates the discovery of the True Cross by Queen Helena and serves as a major tourist attraction.
Ethiopia has a very rich history, and everybody knows the story of Lucy, and we know that the great Eastern African Drift Valley cuts through Ethiopia, and you have a lot of national parks in the southern part of Ethiopia. You have the Blue Nile originating from Ethiopia, so it's lots of tourist spots for attracting people. There's a great potential here.
But industry experts say Ethiopia is yet to reach its tourism potential, even though the current rise in the sector has been spectacular.
When I ask myself that has Ethiopia reached that with all the tourism attraction that the country has, where the country should be, I say no. Even if the number of tourists has increased compared to the previous time, is it because of the promotion made by the country? No.
The country has 8 listed World Heritage Sites. Despite the increase in tourism numbers, it still needs to develop a cohesive tourism development and promotion strategy. Valdi Carlsa, CCTV.
Right then, crude oil is still making its yo-yo run right across the board, especially in the wake of the statement that came out from the Fed yesterday with regard to commodities. 54.93, down almost 2 percentage points. That's the number we're looking at with regard to Brent crude futures at the moment. Some interesting news coming out of South Africa, however, with regard to different commodity. Platinum. AMCU, the union, of course, had essentially nearly sent South Africa into recession last year. They met the CEO of Amplats, who are planning to spin off and sell off all the assets around Rustenburg. There's quite a bit of essentially risk mitigation taking place in the platinum sector in South Africa. We'll have details on that in tomorrow's bulletin. Now, on to Guinea's coast. It's full of mangrove swamps and salt marshes, and salt, incidentally, has long been a source of livelihood for thousands of people in Guinea. The thing is, for a very long time, they've been using traditional extraction methods of getting to the salt that essentially harmed the environment in the process. Now, however, as Maria Galang reports, they're now using a better, more efficient technique.
Along the Atlantic north coast of the Guinean capital, Conakry, tens of thousands of people make a living extracting salt from the marshes. Traditionally, they burn firewood to evaporate salt brine, a technique that's both physically demanding and harmful to the environment. But in recent years, producers like Cabo Camara have switched to an alternative method, using the sun and wind to crystallize brine held in open ponds, then drying the salt on black tarpaulin, producing what's known as solar salt. It's a more environmentally friendly technique.
Now I can pretty much do my work in my normal clothes. That was impossible with the traditional salt extraction method. Then I had to fetch wood and stay with the fire throughout the night. But with solar salt, when I finish work, I can do other things.
For over 20 years, salt producers from southwest France have come to Guinea to share their knowledge on making solar salt, meeting with small-scale producers to help them improve their product.
There
is room for improvement. I find the quality and quantity of the production as satisfactory, but it's not good enough yet for the Guinean market. And so there is work to do on improving the quality of the work to get a whiter salt and also to make a salt powder that customers like.
For years, Ghanaian salt producers have struggled to compete with their counterparts in neighboring Senegal. But unforeseen events have lately given Guineans a competitive edge. More than 5,000 producers have been trained to make solar salt, hoping to improve their livelihoods as well as their natural environment. Maria Galang, CCTV.
The Kenyan shilling remains relatively stable, close to around 3-year lows, around the 92, 91, 90 level to the American dollar. The rand, however, on the other hand, it did post gains after the Fed's decision did come out yesterday, but it's given up those gains in trading today. Right, now on Global Business tomorrow, we'll be looking at worrying times ahead for South Africa. Drought is gripping the maize-producing areas of the country. And we'll also be looking at the fairly lively market for used car parts in Uganda. Some fairly interesting footage in that particular package. We'll have more of that and plenty more in tomorrow's edition of the program. We always like hearing what you think about what we do around here. Send your feedback to Global Business Africa at cctv.com, Facebook and Twitter. Also, your ports of call. Thank you so much for watching tonight. I'm Ramanyang in Nairobi. We'll see you tomorrow.